Okay. Now we know that China market didn't really do well for the last 4 years. In fact, after the global financial crisis, all the rest of the other markets has rebounded strongly. But China market didn't do well. Okay? Surprisingly, even though the valuation is very cheap, it has been underperforming all the rest of the Asia market for the last 4 years. But the way we look at China, we like to look at dragon. So my colleague helped me to put this picture here. You know, if you cannot remember the whole slides, it's okay. You remember this. Now, China is going through a reform. And this reform is going to help China in the longer run, and it's actually good for China in the longer run. Under the new leadership, there's a lot of reform that is being undertaken. So we put here that we think that, wow, this is really high. China is on the right track to become a more polished dragon. Okay? In the short term, the reform is not good. Whatever policies, uncertainties is going to have a lot of maybe negative impact on the market, but in the long run, it's going to bring benefit in the whole China country. At least it can actually avoid certain things. If you can recall in the 1990s when China had a lot of issues, and under the leadership of Zhu Rongji, they did quite a number of reform, and the whole China avoid hard landing. And now we are in a critical period for China. We need the reform so that you can transform China into a very different China going forward. Okay, for China, under the new leadership, there are some messages. It's very clear. The first thing is that the leadership prepared the whole world for a slower growth China. China used to grow at double digit, but you can't have a country with such a big base continue to grow at 10, 11, 12%. Okay? And in the last few years, you find that China is still growing at 9, 10%, which is not sustainable in the longer run. So they are actually prepared the world to accept a slower growth for China going forward. So we are talking about around 7% kind of growth in the next 5 years. So of course, in this reform period, there could be the chances where they may slip below this target GDP growth. But overall, for a big economy to grow at around 7%, we think is doing quite well. And beside that, another key message is that the economy of China is very reliant on investment. If you look at the previous GDP growth, half of the GDP growth contributed by investment. And this is not sustainable going forward. So they have to rebalance the economy, especially the component contribution from the economy. And you look at some of the latest number that I show you in the slides, we show you that they have some success in rebalancing the economy. But rebalancing economy is still beginning. It's still a long way to go, but it's in the high priority of the new leadership of China. And we also expect more reforms going forward. Reform in the sense of financial sector, the resource, the property sector, the subsidies and all that. There is a lot of reform to be done in China. And under the new leadership, they have actually started to act on certain things, and you'll find that action is more louder than words. They are not just talking, but they are actually started to implement some of this reform. And policy easing for us in China, we think it is unlikely to continue. In fact, in some of the indicators that we have in China started to tighten a bit of the liquidity selectively. Okay, but overall, the policy is not tightening a lot, but only China to a specific area where they want to target to slow down the growth. So in the short term, these are some of the key messages that is very important for China. Now this is the performance of China. You look at China, you wouldn't want to touch China after seeing this. But I tell you, in the previous bull market of China, China market gone up by 460%. Okay, from 2005 to 2007, when a huge rally. But of course, when it corrected, and now you look at the Shanghai Composite Index, you find that it's all the way from 5,900 dropped to below 2,000. So it's a very big correction in the equity market. In fact, if you look at MSCI China as an indicator of how China market is doing, you find that China market hasn't been doing well versus the Asia market. It has been an underperformer for the last 4 years. Okay? For a market that has underperformed for so many years, so depressed valuation, I didn't say that in the short term you will want to rush in and all that, but it has a very good chance to come back up quite nicely because you're buying at very depressed level. Okay? You can choose, as investor, you can choose to buy something to ride on the rally, or you can buy something to bargain hunt slowly, waiting for the right timing for the market to rebound. For China, we think the tide is actually still down, still a lot of uncertainties, bumpy road ahead, but it is at very depressed level, and you're talking about underperformance for the last 4 years. You want to talk about underperformance for the next 1 year, it's okay, but when China market rebound, if you look at the history, it is going to rebound very sharply. When, I may not be able to give you a time frame, but I will tell you that currently they are undergoing reform, and these reforms are very important for the long-term structure of China. Because if it don't undergoing some of this reform, China may go through hard landing or crisis. Okay? So the leadership see it as very critical that they want to do something now. Look at the performance of some of the index that is not doing well. This is year to date, which means that I'm not talking about since 4 years ago, but year to date. This year onwards, if you look at it, only IT companies are doing quite well, outperformance. Bearing in mind that some of the IT company like Lenovo is actually one of the largest, one of the top 3 largest player in the world. So some of the IT company you'll find that is quite strong. They are doing quite well. Other than that, utilities, of course, defensiveness, they are doing well. Automobile, there's up and down, but year to date, they are doing pretty decent. But otherwise, all the rest of the sectors are not doing well. The banking sector are not doing well because people are worried about banking crisis in China. And you'll find that cyclical sector, like metal sector, commodity-driven sector are not doing well because when you want to slow down your investment in the overall component of the composition of your economy, you will find that you need less commodity. So when you need less commodity, prices is actually now still coming off and still on the downtrend, impacting some of the commodity-driven countries like Indonesia and Australia. And also within China itself, some of the sectors we may not like, and the metal sector. So they did not do well. But surprisingly also, some of the defensive sector are also not doing well. You look at it, the telecom sector, oil and gas sector, they are also not doing well, and retail sector is doing quite badly. Now, when the retail sector did so badly, retail sector did not do so badly in the past few years. But retail sectors, it means that those consumer discretionary, those shoes, those apparel company, those supermarket company and all these companies, okay? So they used to be focused on branding and mass market, so they used to do very well. But this year onwards, they do not do well, like watch company and all that. It's because of when the new leadership come in, the first priority they go for reform is anti-corruption. Now, when you have this anti-corruption coming off, the gift by people actually reduce. So there's a lot of reduction or decline in the consumption growth in certain segments, especially for luxury segment. So you find that the watch sales, the free voucher, gift voucher, all this has actually come off a bit. Okay, and I think continue from here, you have to find a bottom before you want to relook at the retail sector again, because the same store sales growth for some of the retail company is still weakening, but some are actually doing well. So we are very selective in what are the retail companies that are continue to do well. Valuation for retail company is actually very attractive right now after the sharp correction. Okay, so why are China market doing so badly? I just give you a few reasons. The first few slides, you find that I will talk all the negative thing. But when I talk the negative thing, I will try to counter for you to think of what could be a positive thing from there. Because you don't want to all the way negative, then we don't have to sell anything. I'm telling you that we want to find opportunity in a very depressed market that is very cheap, so that when things are improving, we will be there, okay, to benefit from the upside. Now you look at the GDP number. The GDP number in the past, as I said, is actually very strong. But this year onwards, it started to slow down. And in fact, the China Premier is guiding for 7.5% GDP growth. Okay? And in the first quarter, they only achieved 7.7%. So for our first quarter to achieve 7.7%, there's more downside in the coming quarters. So in second quarter, we think that second quarter is going to announce soon. We think that the second quarter may be slightly lower. There is a risk of the second quarter could be lower than the first quarter number. Okay? But if you look at the composition of the GDP number, it's much healthier. Now you look at it. This is in the past. In the past, you find that half of the contribution for the GDP growth come from investment. And we know that it's not sustainable. You keep building your infrastructure, your road, your trade, your railway and all that. and building after building, it's not sustainable. But in the longer run, there's still a lot of investment opportunity in China, but not growing at this rate. So you really have to rebalance the economy. So the government has actually done quite a good job now. It's being rebalanced now. If you look at the first quarter, now investment growth, contribution to the whole GDP growth of 7.7% is just 2.3% point. So out of the 7.7%, is 2.3% coming from investment, 4.3% come from consumption. So now consumption is contributing a larger proportion of the GDP growth of China going forward. But of course, there are some contribution from export, which is also at risk. But if US economy were to recover well, then we think that the export could slowly pick up again. But overall, you find that the rebalancing is taking place now. And going forward, we expect more contribution from consumption, less contribution from investment going forward. And this is some of the macro indicators that we follow to monitor how will the China growth be like going forward. So if you look at the PMI, which is a purchasing manager index, this one, you find that the purchasing manager index, when we look at PMI index, we look at the trend as well as the number itself. Now if the number is above 50, it means it's expansionary. Okay? If the number is below 50, it is contractionary. So if it's below 50 for a longer period, months and months below 50, it could be recessionary. This is what we see in European, where the PMI is below 50 for some time, it becomes a recession. Okay? But for China, you find that the PMI number has actually dropped to, this is a HSBC manufacturing number, flash manufacturing PMI index has dropped to 48.3%. The trend is slightly down and it's below 50. So because of this, market is very worried that China is facing a slowing growth. Okay? Now I'm telling you, almost like it's a fact already that the China is slowing. China growth is slowing. So we have to adapt to a slower China growth going forward. But the composition of the growth is very key. If the composition of the growth is very strong in terms of consumption, it means that when you want to buy into China market, you play consumption play. You don't play so much on investment, but selectively you can play certain investment. Okay? Because the momentum for investment order book flow and all that is not there. So the composition is very important. You've got to see how. And now is a transition period where consumption is not too strong either. Look at the consumption retail sales number. The retail sales number used to be over 20% in the past. Here. Okay, over 20%. And over the last 1-2 years, it's slowed down to high teens. So when I look at it, 15-16% is quite good. But this year, it has dropped to about 12 to 13%. So we are at about 12.9% last month, retail sales. Still decent sales, but it's no longer that kind of sales that we're talking about in the past. So sales is really coming off, and it's very challenging because in the past, people buy a lot of luxury handbag, people buy watches and all that as gift. And now you know that opportunity for you to give gift is not so much because the whole government is going for a reform, as I said, anti-corruption, right? So officials have to be very careful, and the people, when they want to give, is also have to be very cautious. So because of that, you see there's some slowdown. But there will be coming to a point when after the slowdown, things are bottoming, then that is a real demand that you're talking about. Okay? So we are not too negative on that. We just, because retail company itself has corrected so much in my previous slide, and they come to a very cheap level right now. So you pick now, selectively picking the right one will give you quite a lucrative gain in the longer run. Now in China, there are a few issues that I want to bring it up to you, some real concerns. And these real concerns, on every of these concerns, I will give you my view on how, what we think about this concern. Now, the first concern that people have is about this thing called shadow banking. Can I have a raise of hand to see how many of you know what is shadow banking means? You have heard of shadow banking? Not many of you. Now, shadow banking in China is a big issue. It means that any credit or any loan giving out, not by bank and not by the bond market. Okay? Normally, if you go to any country, you want to get the loan, you either get it from bank. Normally, people will get it from bank. Okay? Corporates get it from bank. Retail consumer will get it from bank. And then for corporate, sometimes they have another source of funding that is from the bond market. Now, shadow banking means it's not from the bank, not from the bond market. Now, why is it so that shadow banking is a concern in China? Now, there's a bit of history. It's because China credit growth used to be very high. It grew at 30%, 40%. There was a certain period they grow at, you can't continue to grow at 30%, 40%. It is overheating in the whole economy, right? So because of that, China government, especially the People's Bank of China, the central bank, will control the banking system, ask the bank not to lend to certain industry, like for example, property industry. They think it's overheated. They want to control the property industry. So because of that, they restrict lending to property. So that is one of the reasons. The second reason is that local government have a lot of projects, big projects, road projects. And in China, a lot of the provincial government, they work as though they are own country, governing their own economy of the state, of the province itself. So because of that, they know how important is infrastructure, the road and all that. So they're building some of these projects. But you know that for a lot of this toll road, the bridges, some big building here and there, they may not have been profitable straight away. So because some of these projects are not profitable, it's quite difficult to get the lending from the bank. So when the bank have the instruction from the top to tell them that you better slow down some of this lending, so how are they going to get the funding? In the past, the local government get the funding by selling land to corporate, to property developer. But now they have an issue, so they can't sell land. The government actually clamped down on the property sector, so they got to get the funding. So some of the funding get from shadow banking. Okay? And a lot of SME also have problem. The SME in China have funding problem. The reason is because the bank, they evaluate it very carefully on what they want to lend. And for them, the safest corporate to lend to is the state-owned enterprise. It means that if the company is owned by the government, it's very safe that the bank will lend to. So the bank actually have a preference to lend to some of this SOE, we call it, yeah, state-owned enterprise. So because they lend to this company and this SME is being ignored, hardly get any funding from the bank, where are they going to get funding? They get it from the shadow banking. Yeah? So how did this shadow banking come about? Now people have a lot of money in China. So when they have a lot of money in China, they don't want to put so much money in the deposit because not much you're earning interest. And the bank come up with a product which we are also very familiar, wealth management product, guarantee you a certain return. Okay? So all this wealth management product for the bank is also okay. I lend some of this package, to the trust company, and the trust company repackage it so that the bank will sell it to their client, wealth management clients. So all these people, instead of putting their money in the bank as deposit, earning so little, they might as well go and buy some of this wealth management product, which give them a higher return. So they go into this wealth management product, and this wealth management product, what did they do? They have to earn a certain higher return to give back all these clients, right? So they go and lend. They lend to the corporate, they lend to some of the SME at very good rate. Now in the past, there are some illegal system in China, almost like we don't call it loan shark, we call it friendly party, we lend to each other. But the interest that they charge is so high. They charge about 1-2%, in fact they can charge 3% a month. So if you analyze, it's 20%, 30%, return is very high. So, but it's not guaranteed. But wealth management product is another channel that they try to channel out to lend to some of these companies that need money, need funding. So it become a very good industry that has actually ballooned out. Look at wealth management number. The wealth management product, it hit an outstanding amount of 7.1 trillion renminbi last year. End of last year, 7.1 trillion. It means there's a lot of system. But all this wealth management product, if any default happen, will it hit the bank? Reputation, yes, but it doesn't hit the bank balance sheet. It is off bank's balance sheet. Because the bank instruction from the central bank is that not to lend, or not to lend to a certain sector, or restrict a certain lending to a certain sector. So they are very careful. So by using all these wealth management products, the risk is actually with the holder of some of this product. So it's not in the banking system. So therefore, when you look at the banking system of China, you think, wow, China is going to have a banking crisis. But you look at the NPL number. How can the NPL number so low? NPL, non-performing loan number, is only slightly below 1%. Can you imagine slightly below 1% for China? It makes sense because they are very selective in lending. And whatever lending that's risky is off balance sheet. So of course the official number looks low. Okay? Now this is going to be a concern. Therefore, the government is doing something about that. Now some of these trust companies, they need funding. They have to go to interbank market to borrow money and all that. Later I will show you some. I get a bit too fast on some. But anyway, come back to this chart. If you look at this, you find that the wealth management product got some issue. Even though the amount is rising, the issue is that if you break down according to the tenor, if a high net worth you buy something, okay, the tenor won't be too long. The tenor could be below a year, it could be 24 months, could be 36 months. But this wealth management product, the money is being channeled for long-term infra projects, long-term toll road projects. And there is a tenor mismatching. So it's an issue here that is a mismatching of maturity and also lack of transparency. How is lack of transparency? You buy into some of this wealth management product, they don't tell you where the money will invest in. They tell you roughly where they are going to invest in. But how the bank do is that they get a few wealth management product, pull it together, a pool of funding, they go and fund an infra project that is long term. How are you going to fund a long-term project with so many pools of wealth management product? You have to continue to renew after they expire, right? After they expire, you got to continue to sell more and more product so that you can sustain that kind of funding to a long-term project. So beside all these things, you also have lack of transparency and links of risky assets. So it's very dangerous for people to buy into this wealth management product. Of course, we are not in China, but if you have any friends or relatives in China, highlight to them there's a risk that they actually buy into some of this product. So the government is actually very concerned. Another thing that they are concerned is also the local government. Now, local government have a lot of funding needs. Now you look at the loan given to them is actually quite high. And in terms of percentage of GDP now is almost very close to 30%. Okay? The local government need funding, and a lot of the funding are channeled into projects that's not profitable. So that is an issue. Now you may ask me, so all the shadow banking have an issue now. So are we going to be very, very concerned about shadow banking? Do you lost me? Is shadow banking something very technical and then you lost me? Now, when we talk about shadow banking, we know that the amount is very big and all that. Let me tell you why the Western country look at China. They say, wow, China shadow banking 7.1 trillion is very big. But if you look at the shadow banking, the wealth management product is 7.1 trillion. The shadow banking is larger. So if you look at the shadow banking as a percentage of GDP, there's a broker did a rough calculation of it. It's ranged between 18 to 31% of GDP. Okay? If you compare to US and Europe, US is more than 100%, 153% of GDP. And shadow banking in Europe is 160%. So this 18 to 31% compared to 100% is still very far. Okay? And second thing that we don't think it will be, if it cause a big crisis in China is because China is a high saving country. Now Chinese like to save. Chinese like to save, either you keep the cash or you actually like property. So that's why you see property prices continue to be quite strong. Even though there are some slowdown, there's a lot of restriction, there are more measures on property coming up, but you find that people still like to invest in China property because the liquidity in the system, the money that they have cannot go out. So for China, it is a closed capital account country. So when you are in this kind of country, you make a lot of money in China, you got to find ways to go out, the money to channel out of country. You know, it's not easy. So a lot of money trapped in the system. So because of that, you find that China's saving rate is 51% of GDP. So it is a country with very high saving rate. The most and worst, if you have any risk of some of this product, default, who lost? People lost money. But I think they really bankrupt. They have a lot of money. They still have a lot of money because saving rate is still very high. The money that they park in wealth management product maybe is just a certain percentage of their investment. Another way of looking at it, will it be a blowout crisis? Now look at China. Now China itself have 3.3 trillion foreign reserve. And China have very little external debt. The central government, the external debt, which is non-renminbi external debt, is less than 1%. Most of the debt are renminbi, which means their own currency. So they don't owe people a lot of money, and they hold a lot of US treasuries, and they hold a lot of forex in US dollar. So that's why it's quite difficult for an outblown situation. Now, for an open economy, it could happen. It's because it's open economy, you are relying a lot of external debt. Of course, you are exposed to a lot of potential crises. Now, for China, you also have crisis, internal crisis. But can they handle the internal crisis themselves? I would think so. Reason is because if you look at the banking system, who owns the bank? The government. Most of the big banks are owned by the government. Okay? Most of the big banks. The smaller banks that have problems are private. But the big banks are owned by the government. And the banking system as a whole, majority are owned by government. And who are the borrower? Local government and some of the corporates, big corporates, SOE. Who own them? Government. So it's like the government own the bank, government own the corporate, government own the local government. Is the from left pocket to right pocket. So your left pocket got problem, it's just a matter of how you want to manage it internally. So it's an internal issue itself. So because of that, I don't think that it will blow out into a big crisis until the whole thing collapses. It is very different. And in fact, they have a more severe problem in the 1990s. In the 1990s, when the growth, double-digit inflation is out of hand and all that, they have even a bigger problem. But under the leadership of Zhu Rongji, you find that after the reform, they avoid hard landing. Okay? So we are not talking about a blow-up crisis here in China. So because of that, I'm showing you some slides that yes, there is problem. Yes, these problems are real. These are real concern. But it's not something that is really blow out and you can't control. The more important thing is that good news is government is aware of the problem. And the government is so aware of the problem and they started to introduce reform before the problem gets out of hand. So we are now in this stage where they recognize the problem, they handle the problem. Now under the previous premier, because they are tail end of their leadership, they don't want to do anything drastic to the system. But under the new leadership, it's the first year, let's do something. So they started this reform. And this reform, in the short term, is no good for growth. Growth is slowing, but this slow growth is actually intended. Plan. They want it that way. It's for longer term benefit. So if you look at China, this is a whole list of the reform measures. I don't go through it. You have a financial sector restriction on credit on wealth management product. You have a safe export restriction. You know why safe export restriction for China is that, you know, people need money. They fake their export. Everything is fake. I don't know what happened to China. Everything is fake. Fake until your own milk powder also you cannot trust. You have to rush to Hong Kong to buy. They fake the export invoices and all that so that they can get some funding. Okay, because of this export, let's say exports to certain, so they get some funding from the bank, and the bank see it as, oh, okay, this is export, this is trade financing, so they give you the finance, and you know some of these corporate get this financing and do what? Buy into wealth management product, get a higher return, positive carry, and this is not right. But things like that actually happen in China. Yeah? So when you invest in China, bear in mind China is an emerging market. So there's a bit of risk and corporate governance risk as well. Yeah? But because we know that the reform is going through, let's be patient with China. Let's believe that one day it will come back out quite nicely. And the next thing that we see that the economic rebalancing is going to help also the downstream industry. Currently, if you look at the market composition, a lot are at the upstream. Doesn't benefit the downstream, but going forward, rebalancing will help the consumption, also will help the downstream industry. And more important, there's still a long way to go to improve the corporate governance. There's a lot of corporate governance, even their own domestic people do not believe in their own product. You can carry a very good brand, you know, you can seal the product say imported from where, but the moment you come into that country, it could be changed, the content. So there's a lot of trust issue here. I think there are a lot of implementation to be done by the government of stricter control in many different segments and sectors. Okay? So corporate governance is going to be a big issue. And once they have better corporate governance after the reform, China will be very different. Okay? It's not going to happen in the short term, but slowly, gradually. I will mention a bit of the panic recently, because everybody that follow market know that very recently, China have a panic sell down. And what happened to this panic sell down is because of the squeeze in the interbank market. And there was a bank that was trying to go into the banking system to borrow money, but they couldn't get the money. So the SHIBOR rate went up a lot. I try to be less technical here. Okay, when you look at this thing, it means the interbank rate is a signal to show how is the liquidity doing in the system, the banking system. And when the interest rate shoot up a lot, it means that it's tightening. It's no good for the economy if it stay high at long. Okay? But what I want to tell you is that this whole thing is tapering off. This whole thing about what happened in June, it started in early June and it hit a high of 13.4% SHIBOR rate, interbank rate, on 20th June. Yeah. But subsequently, it has actually tapering off. And now it's actually below 4%. So we think that this concern is a spike out, yes, it may come again, but it has actually tapered off. On and off, we still believe that the central bank, the PBOC, will come in to intervene in the market. But they just want to teach a lesson to some of the smaller banks to be more careful in their the way they manage the assets and liability. Okay. There's another chart here, and this chart I actually follow very closely. It's the short selling. Now, when we invest in China, we normally invest in Hong Kong. If we want to invest in Shanghai, the A-share market, we need a QFII quota. Okay? So, okay, sorry, 5 more minutes. So this chart is very important. When you have this shoot up short selling, if the market is very bearish, now what happened in the Hong Kong market is there is a lot of people that can go and short sell. Okay? And so when a lot of people go short, when the short ratio go up a lot higher, when there is any positive news, this short selling have to cover. We call it short cover. Short sell means you don't own, but you sell already. You know, if the market go down, you make money. There's a lot of people short the Hong Kong market right now. They are at the short level. So if any positive news, market rebound, they will panic, they have to cover their short position. Cover their sell position. So because of cover short position, any positive trigger, you find that the rebound is very strong. Why is the rebound strong? It's just like why the correction is strong. Because when the correction, some negative happen, people panic. They are not only selling the stock that they own, they short sell. They don't own the stock, they also can short sell in Hong Kong. So that's why it accelerates the downtrend. But when positive turn, it also accelerates on the downtrend because the rebound can be very strong because they have to short, they have to cover whatever they short. After they cover, they may turn buy. So it's double. Yeah, it's double swap, but it actually it can work for you if you're on the right side lah, either short or long. Okay, either side. Okay? So this is something that I see not very negative because currently a lot of short selling, a lot of negative already in the market, already priced in the market. If you look at it, this is oversold level. Where is this blue color? Hit this level, oversold. People, you talk to everybody is so negative. When are you going to buy a market where everybody is so positive? Yeah, you can, because the chances is that everybody is so positive, you can make a little bit more, right? When are you going to make money also? There's some people, smarter people, they don't mind if things are very negative. Let's buy a little bit, but it could be worse, huh? But I can stand the volatility. As long as you can stand the volatility, you don't go all the way in. But slowly, when times are right, the rebound could be quite strong. Okay? This is what I am quite positive in. Okay. But anyway, in summary, I tell you all the negative things. But besides all the negative things, one slide I want to show you how cheap is the market. Now, this is the valuation. China market currently is at 1 standard deviation below here. If you look at the current PE, it's about 9 times. You look at the forward PE, it's 8 times PE. Now, China trading market historical used to trade at 15.5 times PE. If you look at the fair value, a lot of people are saying the fair market price to earnings ratio for China should be about 13 times. What is it now for forward PE? 8 times. China is at 8 times PE. Okay? But of course you say that, oh, but China, a lot of it is because of bank. If you don't want to buy bank, Eastspring we have a product called Dynasty, and our Eastspring Investment Dynasty Fund is actually, we won a 3-year Lipper Award last year. Okay? We don't invest in China for the fact that China banking system, we don't invest in the bank. Okay? So if you don't like bank, you can choose some of the product that is suitable, that position more into consumption. So how we position is that we underweight the metal sector. We want to position into a bit of retail. Yes, retail did not do well, but we think that selective retail company will still do well. Valuation is very cheap. So for you, you have a buffer. And the strong buffer that you have in China market, regardless of all this bad news, is your valuation is on your side. Can 8 times become 7 times? Yes, why not? In crisis, it can happen. Yeah? 8 times to 7 times, from 8 times PE to 7 times PE, yes. Will there be more earnings output? It could. It could have a little more downside, but a lot of the negative view is already priced in the market as the chart that I show you, right? Now, what are your positive? If things go right, what will happen? All the short seller will have to cover. And then people will start buying again. Yeah? You may have time, but every time in China, when we invest in China, you find that every time the positive happens, it just triggers a rebound. It's very sharp. It is going to be very choppy, if you ask me, for the next 6 months. Because reform takes time. So market is going to be very choppy in the next 6 months. It's only for those people that really have high risk appetite. If you have a high risk appetite, yes. But what is the upside? Upside of market is that when the market go back to the norm PE ratio, and the normal PE ratio is what? It's about 13 to 15 times, the way we look at it. Now from 8 times to 13 times, there's a lot of gain. A lot of gain. So your buffer is that, yes, you may have a bit of concern here and there, but don't ignore China at all. Okay? If you have a risk appetite, I will encourage you to slowly pick the right funds that you want to invest in and started to put some money in your China fund. In the longer run, I believe that this will give you very good gain in the longer run. Okay?